Hi and welcome to the Market Alert for Monday the 26th of July 2021. So stock surge after Monday's mayhem, but bonds, bullion, Bitcoin and black gold were flat. However, record highs as PMIs plunge, jobless data weakens and housing data disappoints. Of course, this is a tongue-in-cheek statement. However, there was something very interesting going on behind the scenes on Friday, and I have to say I have never seen this before. I followed the implied volatility since 1994 when I saw this pattern where if there was a 100% increase in the implied volatility following a down move in the stock market, then the down move was likely to be over. However, something very interesting happened during Friday, and if you don't look at the implied volatility, you will never have spotted this, but we went from 14.52 on Thursday to 21.84. Well, you think, well, nothing odd about that. Well, there is, because on Friday, as it says here, record highs. Now, this doesn't happen unless the market is going to move to the downside, or they've got something lined up where it's not too promising on the upside. And if you look at the overnight market, you'll see exactly this. But just before I do that, let's just have a look at today's news. We've got German Info Climate MPC member is speaking. Vey, I think is how it's pronounced. Vehi. The big one for the week, just before we move on, is this, the FOMC. There's no increase in interest rates forecast, but interestingly enough, there is a press conference, which I'm surprised about because we normally have those every quarter, so it looks like they're a monthly event at the moment, so that will be interesting as well. But let's get back to the stock market and to the Dow. The Dow made a new all-time high on Friday at 35,098, but look at the overnight. Straight reversal. That's interesting given that what we see here, where we've already got 100, but the options have been marked up about 80%, 90% of Thursday. So the volatility was already priced in that we're seeing, if I just bring it back, that we're actually seeing here with the overnight market moving to the downside. Now, normally when the market makes an all-time high, there is generally some sort of a pullback, but this so soon overnight, and then, like I say, the significant increase in the implied volatility, the traders saw a potential risk here. And I'm not surprised, again, because the headline, as I say, it was tongue-in-cheek. You know, the PMIs plunge, the jobless data weakens, and the housing data disappoints. The fundamentals are not backing what we're seeing in the stock market, hence the reversal overnight, which is very, very interesting. So, given that's the case, we could see further potential weakness. So from this low to this high on a fib retracement basis, there's your 38. But in between this, we've got the 5 bar and the 20 bar to close through as well. Now, if you wanted to, you could do this. I have what's called a trailing Fibonacci, and that's where it just looks at the previous lows and you just mark up from these. So the next low down is this one here. So from this low to this high would give you Fibonacci retracements where the market's likely to find support in these areas. And notice now how the 89 actually ties in with the 20 bar moving average there. So I could remove the 38 because we're already through that, and then leave these as well. You've always got your main area, which is from this low to this high, but now we've filled the gap in here. If the market closes below the low of this bar, Friday's bar, then I can redraw these and move all the way down until we get to this point as well. But this is the market hasn't closed below the low of this bar yet. They sort of these Fibonacci levels are very good, and as I say, you can see the 20 bar ties in with the 89 at this level. So I'll leave those in the chart just to see what happens. Of course, they could surprise us all and bring the market back. As I said before, they want to keep the market on the highs, but it's just a very interesting thing that happened there during Friday. I've never seen that before in all the years I've been logging the implied volatility. And here in the 30-minute, you can see a similar thing as well. So from this low to this high now will give us more or less what we were looking at in the daily chart. There you go. Well, we're at 89% on this one. So again, already we're starting to roll down the fibs. So let me just remove those, and from this low to this high. So I can use the 30-minute chart and all of the previous lows to monitor where the market's likely to find some sort of support, as long with the daily chart there as well. In the German DAX, so we've got a similar picture as well, except we didn't get back to the all-time high. We just got through 78 on Friday. This has got a straight reversal in. We're already back below the 20-bar moving average there as well. So let's just grab some fib retracements from this low to this high and draw those in. And again, you'll see that the 38 is down at the 5-bar moving average on this occasion, because it's not got back through the 20-bar. And again, you can do exactly the same here. You could go to the next low down, which is here to here, and this would give you a similar picture of what you're seeing in the Dow. This time the 89.78 is the 5-bar moving average. So again, I'll keep these in, and I can keep referring to them and glancing at them in the trading session. And if you wanted a bit closer, then you can go back to Friday's low, as we did with the Dow, and just click there to the high, and you'll see that we got the 89 is down towards Friday's low as well. And that will be an interesting area for both of these markets come 7 a.m. when the futures opens and the electronic market kicks off as well in the US as well. So the low and these fib retracement areas are very important. If the market doesn't hold at these levels, then we'll move south. If not, it'll give them the opportunity to try and bring the market back above the DP level there. And if we look overnight in the 2-minute, we can see that the market gapped lower straight through the DP, and then has just traded in a zigzag, making its way to the downside there, down towards the S1. And if we just compress the chart, you will see the low there. So this will be very important for the German DAX there. In the metals markets, this also switching around. This is gold. We see the market finding support at the 50% retracement during Friday session. This moving to the upside because the dollar has come under overnight pressure. And again, what I'll be doing is from this high to this low, just have a quick look, see where the upside resistance could be with gold. I'm going to remove that there, and I can remove the 38. So these are the upside resistance areas for the yellow metal if prices continue to move higher. Seeing the same there in silver as well, which I'm surprised by. I was quite expecting to wake up and find it had been slammed on the overnight session in Asia, but not the case at the moment. But then wait till 1 to 2:30 every day. They seem to have been hammering the market lower, as you've seen in the market alert. So these are the upside resistance areas for silver prices, should they continue to move to the upside. If not, we've got this main 78% on the downside, and we could also, given the temptation of the bankers to move and shake out to the downside, so we've got some more there as well. That's where I would mark these up to the downside, just in case we got a further retracement. I would be happy to see the market break to the upside. But what I want and what happens are two different things. We've got to trade what we see and not what we would like to see. That's the key there. Okay, let's have a quick look at Friday. It was fairly uneventful because we had all of the flash news. So I'm just going to whiz through this. You can see there was straight off the market was sideways, as we just had flash news after flash news all the way through to 9:30, and the market just basically traded in a range, trading to different fib levels. And then after the 9:30 last one, the market just traded sideways there. Oh, that was actually a central banker speaking, wasn't it, on Friday? if I recall. Anyway, it was one or the other. I know it was dominated by flash news, and then we saw the market just move to the upside. Some of the flash news was good, some of it was bad, and mid-morning we see prices starting to come back, then move back to the upside. Had a look at the daily chart just to see where we were. The Dow obviously had made great strides to the upside and continued to do so as the afternoon session kicked off. Meanwhile, the DAX barely followed. You can see there. Then we got the US flash news there at 2:45, and it wasn't brilliant as we saw the PMI data. The market found a bit of support, but that's just a 20-point move. That's all it is. It looks like it's a big move, and then the market did nothing as the Dow went on to make its all-time high eventually that evening. And then, as I say, the most important thing that I have seen for a long, long time is that increase in the implied volatility. Okay, that will do it for this one. Let's see if the markets continue their weakness to the downside. It's every chance of doing so given the increase in the premiums of the options, which is, like I say, I've never seen that before. There's always the chance, of course, that the risk has been eliminated overnight as the markets pull back, and then prices then move back to the upside, and maybe the implied was marked up purely in anticipation of this happening. We'll find out. Like I say, the key to it will be to watch the low of the Dow and the DAX should prices trade down to that level and how the market reacts to it. Okay, that's it. As ever, thanks for watching. See you in the next one.